Welcome back, guys, to another roundtable. My name is Adam. Once again, with me, Rusmin.
Hello.
And Victor.
Hi, everyone.
Thank you so much for joining us today. And before we dive into our roundtable, I just want to say thank you so much for being a subscriber to this channel. We're 25,000 subscribers.
Yay!
Yes, and three handsome young men talking about stocks and investments. 25,000 of you just listening to us, and I think that's incredible. So today we're going to talk about Tencent selling their stake in SEA, 3 billion divestment, and of course they also kind of like gave away their JD stake to Tencent shareholders as well.
Yeah.
So we're going to talk about this. I mean, I think this piece of news has been around for some time already, but we want to cover this for this roundtable and what it means if you're a Tencent shareholder or a JD shareholder or a SEA shareholder. All right. So quick details of the sale. What did Tencent sell and give away?
Okay, so for the first part, I think initially the first news that we heard was that Tencent was giving out JD shares as a form of dividend in specie. Okay, so what this means is that if you are the shareholders of Tencent, for every 21 shares that you own, you'll be entitled to 1 JD shares. Okay, so typically Tencent is traded in lot size in Hong Kong is about 100 shares. Okay, so most shareholders, I mean, if you buy one lot of Tencent, you should own maybe 4 shares. Okay, so you're going to end up with some odd shares that you're going to have hard time selling. Okay, so this news basically, the Tencent shareholder will receive this as a form of dividends. Okay, so and why, of course, Tencent sell this stake mainly because I think they did mention that the JD itself has actually matured in terms of investment because you look at the Tencent investment portfolio, right? I mean, they do have a strategy where they do invest, they do a lot of VC, actually venture capitalist style of investment where they look out for potential companies that are growing very fast and then they actually requires a lot of capital. So they took a stake in them, they give them the capital. Of course, on top of that, we all know Tencent is WeChat and in China they call it Weixin. Weixin, I think, is very popular in China. They've got close to a billion in terms of monthly active users. So that will allow investee companies of Tencent to actually access or tap into Tencent, the whole ecosystem, right? So they've got a lot of resources. So they're typically the first or number one choice for VC funds. Okay, because if I have Tencent as my investor, I can do a lot of things.
You feel great, like a big boy looking out for you, right? Big brother.
Yeah. So in fact, up to today, I think they invested more than 1,000 other companies around the world. For Tencent, bulk of it is actually in China, and that value I think is about more than $1 trillion in renminbi. Okay, so it's huge in terms of the quantum. So when they invested in JD in the early days, they treat it as a partner to compete with Alibaba, right? So Alibaba is very strong in China, Taobao. And then of course their Tmall. Okay, so by partnering with I think JD, it allows Tencent to have a mall within their own ecosystem. Okay, then of course along the way you have Pinduoduo, right, and then Kuaishou, the new format of live streaming, right? So I think till today, basically the official statement they did say that they have actually reached a maturity for JD investment, so they decided to actually unlocked it and by basically paying out as a special dividend to the shareholders.
Okay.
Yeah. Yep. So that was the official
theory
statement.
number 1.
Yeah, theory number 1. Okay.
What's theory number 2 then?
It is because of the Chinese government.
Okay. So what about that?
So I think there were a lot of guesses where I think the regulatory environment in China now is actually very intense. So Tencent has a lot of influence across their investee companies. Okay, so they invested in so many companies. In fact, if you look at some of the top investment portfolio that they have in their portfolio are companies like your SEA, okay, which is basically Southeast Asia market, and then you have your Meituan, you have your Pinduoduo, JD, of course, and then the rest are outside of China, and some of it are still within China, like Kuaishou, Bilibili, right? So these are very big companies in China, and they're quite influential in a way. So as China continues to crack down anti-monopoly law and all that, so I think they were basically saying that Tencent is under pressure basically to divest some of these companies so that they don't have so much influence on this company. Okay,
it could be like a preemptive move, right? Before the Chinese government comes down hard on Tencent, you can just trim away your stake and say, it's not monopoly anyway. I mean, it's not a monopoly because I don't have stakes in these companies, or reduce them.
So in a way, they took the initiative to do that. Okay, so that could be one of the possible reason. But again, the official statement basically they say it's matured. Okay. Right? Basically, when they say matured, the growth is limited, right? Okay. And then they wanted to divest it out and then put the capital to a better use. Okay, so in this case, they actually pay out as a dividends for shareholders. Okay, so and as a portfolio managers, of course, if I look at Tencent, the competition landscape in e-commerce in China is actually getting more and more competitive. Your new players coming in, I think your TikTok or ByteDance, where they actually have this live streaming format, which is getting a lot of popularity in China. So that kind of like make JD will be in a tougher position to compete moving forward.
I think live streaming in China is just tremendous. It's crazy how much you can sell just live streaming.
Yeah,
I mean we have like stories in Singapore with like people doing
live
auctions
streaming,
but that's like small potatoes compared to what's happening in China, right? It's like how much did you sell in one day?
Billions,
right?
Yeah, Li Jiaqi is one of the list.
I think they even sell helicopter or something. Or
helicopter. Who's going to buy a helicopter?
Rocket.
Oh,
no, a real rocket?
Yes. Ticket to a rocket, right?
It's just amazing. It's just something that's so unique to I think China or Asia maybe.
You can sell anything, I think, on live streaming.
So it's entertaining and it really moves the numbers.
Yeah, so e-commerce market is actually getting more and more competitive there. So I think maybe from the investment point of view, this investment is getting more and more competitive. So in the future, it may be tougher for them to win market share or get the kind of growth that they expect them to get. But it is no longer the case, so they may actually divest it in that way. Okay. So those are few reasons why I think Tencent have divested. Yeah. So
that's for JD. So what about C?
So C. Okay. So C basically is a company that I think we did talk about sometimes back, I think more than a year plus ago, right? About C. So C is a Southeast Asian company. So I think they are very popular, when it comes to Shopee. So I use Shopee. I think most of us do. And of course they also have G Arena, which is a game distribution platform. They also have their own publishing house where they publish this game title called Free Fire, which is very popular, I think, across the world. And so they recently also made the announcement that they wanted to, that there was a portion of C stake. I think about a couple
3 billion, I think.
3 billion.
3 billion. There's a couple of percentage there. Okay.
Basically, they reduced from 21.3% to 18.7%.
Yeah. So 2-3% of. So basically, they unlock some value out of it. Okay. And then they keep the rest. They basically mentioned that they will keep the rest and then to let it continue to run. Okay. Because C still has a lot of headroom to grow, right? They are entering into Latin America. They are entering into India market. So there are a lot of revenue for them to grow very quickly. And the proceed from C, they wanted to use it as to fund new investment and also for their social initiatives, right? So I think we have heard the news that Tencent actually made the announcement to commit about 100 billions to help basically to support the government policy for common prosperity.
100 billion renminbi.
Renminbi, which is, I think, on par with Alibaba. Okay, so these two are the biggest. Some people call it donator for social causes, but don't see as that's what a lot of team being played out by American investors. But the way I see it, I think this is an investment where they can actually align with a government policy where they can actually go in to support some of the area where the government is looking to build, right? So by investing in this area, I think that will eventually they will get a return also from that aspect. Okay, so it will not be the money where they just give away and that's it, they don't benefit anything. Yeah, so that's something that I think is eventually for the future capex.
I actually think it's a good thing that I always think it is a good thing that private companies and governments work together to build stuff. I think it helps because sometimes if you just go all private, I mean this is my opinion anyway. When if you just go all private, you're just looking for profit all the time.
Yep.
But as a government entity, sometimes in Singapore we have like some operations where the government works with private enterprises to build things, and I think it's a good common ground. So in China, they're kind of like doing the same thing where it's common prosperity. They want to raise the floor for everyone in China through these initiatives, and Tencent is a big part of that.
Yes,
it's a way to, I guess, get on the good side of the government.
Okay, so for this divestment, I think there's nothing on the board for Tencent as shareholders, right? Because you don't get anything.
I know.
But I think upon this news, I think there were a lot of selling pressure across Chinese companies, especially those owned by Tencent, because people were actually kind of expecting that Tencent will continue to do the same thing with Pinduoduo or Meituan by giving up shares to the shareholders or divest them off. So the market started selling them.
All right. So, I mean, I think one of the things about this deal is, of course, I just want to bring this back to the JD deal.
Yeah.
So, you're going to receive, we're all Tencent shareholders here.
Yep.
Yes.
So, we're going to receive some
JD shares.
JD shares.
Yeah, sure, yeah.
So, what would you do with the JD shares once you get them?
I think unless you are owning in the multiples of 2,100 shares, basically 21 lots of Tencent, which is quite a big size, big quantum, I think 5 figures at least in Sing dollars. You will not, I think most of us will ended up with odd shares. Yeah, so if you, let's say, own 2,100 shares, let's say you may get, 2 lots of JD, right? One lot of JD is about 50 shares, okay, which you can trade in the normal market. Otherwise, below that is basically all your odd shares. Okay, so generally, I think this quantum for anyone who, let's say, own 1 or 2 lots of Tencent, right? I think it's going to be a very tiny amount, right?
Okay.
A few hundreds bucks, and it's odd share, and it's going to be very hard for you to sell.
And then you have the brokerage fees to consider and all that. It may not actually make sense.
It usually does not make sense.
Yeah.
Yeah.
You just kind of like, so what would you do? You just,
Let's say in our case, I think we may own, some of the shares are actually in the normal lot size of JD in quantity. I think for us, we probably will continue to hold JD because JD still has its own runway to go. I think in the logistic market in China is also still expanding, and JD is also entering into some of the the group buying, like the one that actually being deployed by Pinduoduo, Jingxi, okay, which has been getting a lot of popularity in China, right? It's basically the answer for JD to Pinduoduo. It kind of like clone exactly what Pinduoduo has done, and Pinduoduo has actually become very successful in China, right? One of the e-commerce players there, the third largest.
Right.
Yeah.
So you basically just kind of hold on to it because JD is a decent company in your opinion.
It's a decent company. I think just look at them as the Amazon Prime, right? Without the subscription, but in terms of service and quality, basically the feedback among Chinese, they love JD, right?
Okay.
Because the service is tip top.
So you're happy to hold on to that investment in JD?
Yes, yeah.
Even it's just a small exposure to it.
Yep.
And it doesn't. For some people, if you're a retail investor, you don't own like millions in Tencent. It doesn't really make sense to sell whatever small lots that you have.
Yeah.
But I think, of course, those who still holding on to JD, you can expect some volatility in JD.
Okay.
Because definitely will be some selling pressure because some people who owns the JD share really don't want the JD share.
Okay,
so they will, and when you sell in the odd lot market, the spread is very, very big.
Yeah.
So there's maybe some, but if you believe in the long term, you think it's okay, I think you just ride the volatility.
All right. Okay.
Yeah.
There's not much of. you just got this free
Free,
in a
yes,
sense, right?
yeah.
All right. Tencent basically they're kind of rebalancing their portfolio.
Yep.
They're a very
Yes.
successful VC in their own right, and but some people could see, like you said, some of the selling pressure across some of the Chinese stocks as well because JD was like moving all these stocks out. So if you were, let's say, JD or SEA shareholder, how would you feel about Tencent, reducing their stakes and all that stuff?
I think let's start off with maybe why Tencent sell, right? So I think one of my take is that they wanted to realize the investment portfolio they have, okay, because it has been underappreciated by the market. And by doing that, they unlock the value, and of course the market started to perceive them that this big shareholders is going to unload these companies like SEA, JD, and then that's where it created the panic selling. Okay, so some investor of SEA and JD may started to panic because your biggest shareholders is getting out. All right, and of course not entirely for SEA because they just reduced the stake. That's all, right? So if you're an investor of SEA, all right, I think generally if you believe the SEA future, you should be continue to hold on to the share regardless of whether major shareholders there's any changes on that. And in fact, when it comes to working relationship with Tencent and SEA, basically Tencent has some of the games title that actually being distributed by the G Arena. Okay, so that angle alone, I think it likely, I don't think it will affect the relationship moving forward. Okay, that's for one. And second, for G Arena, so-called the SEA Shopee, I think that's one of the big part. I don't think there's any impact from Tencent not getting out as a shareholder or reducing their stake.
Okay.
Yeah, so there's a very limited impact for the SEA shareholders. JD, on the other hand, may also have a very minimal impact in that aspect. Okay, so I don't think as a shareholder you should be panicking about it.
And they still continue working together on WeChat and stuff like that, right?
Yes, they probably will continue to spend ads on WeChat itself. That's for JD because for SEA, they are mostly why Tencent invested in them because they have exposure in Southeast Asia market, and it's almost like a distribution game platform just like Tencent in China, now they have want to extension in Southeast Asia market
Okay.
through SEA itself.
Basically, so I think SEA is the dominating player in terms of the Southeast Asia market in terms of e-commerce. But then I think we also need to also look on the REIT side, because if you were to look at Alibaba recent, I think Investor Day, they actually announced that they're going to ramp up a lot on their Lazada, right?
Yeah.
Because Lazada has been losing, to Shopee for a long time after the transition of Alibaba acquiring Lazada in 2016. So you can see that Lazada has been sitting the bad seat, because I think Rusmin got shared before. I think in one of the videos said that our past video in Shopee, he said that Shopee a lot of like discounts and all this, but Lazada totally don't have. So I switched from Lazada to Shopee, and that's what exactly Rusmin said, right? Right. So they have been sitting on the bad seat, but then now they tell you moving forward, the next few years they're going to ramp up their GMV. So right now their latest 12-month GMV is about 21 billion for Lazada. Shopee is about 56 billion. So Lazada want to aim 100 billion in the next few years.
Okay.
So we can expect more competition for SEA moving forward also. Okay, but then of course the good thing about SEA is that, like Rusmin said, they not only in the e-commerce, but they also got the Garena, and the Garena is actually the profitable business, and it's funding the growth of all this e-commerce. But then in the end, I think you can expect volatility moving forward for Shopee, I would say.
Okay.
Yeah.
I mean, competition is heating up.
Yeah,
I think
correct.
post-COVID, everyone can just see how convenient it is to just like, I buy everything online nowadays myself. Yeah, it's just so
Correct.
easy.
And
So
moreover,
yeah.
because Alibaba, they want to focus a lot of their international as compared to their China, because of the clampdowns and all this. So there's a lot of competition coming in.
So
Alright.
I think for basically the investors of SEA, they don't invest in SEA mainly because Tencent.
Yeah.
Alright. So I think that shouldn't affect their thesis unless there's a change in their thinking of the SEA in the future. Like the idea of going to India may not be a good move.
Okay.
Right. Some things that they don't like, then of course they have to reconsider selling it.
All right.
Yeah.
I think that's the takeaway from this roundtable, is that you shouldn't be influenced by the big boys.
Correct.
Yeah.
Whether they're buying or selling. I mean, yes, it's good information to know about, but sometimes you don't really know the reasons for them buying
Yeah.
or selling, because it's not fully transparent. They have
Yeah.
their own reasons. They can give an official statement,
Yeah.
but that's what it is. And all the times, I mean, every single time when you buy, it should be just based on your own
Correct.
research, investment thesis, and whether it fits your portfolio.
Yeah.
Yeah.
Whether you want to own JDC or whatever it is.
Correct.
Yeah.
And moreover, sometimes maybe when all these big players, when they sell, maybe like what Rusmin said, they want to rebalance the portfolio.
Yeah.
And that probably depress the share price, that give you an opportunity to
buy
look at them.
Yeah.
Yeah. So that's another way you can look at.
Yeah, so don't blindly follow the big boys. It's just information.
Yeah.
Make use of it in the way that makes sense for you. But yeah, you shouldn't be buying and selling based on what they're doing. It's just entirely different portfolios, different goals, and all that. So if you are thinking of as a JD or C shareholder, whether this means anything to you, we think the long-term prospects are essentially more or less the same.
Yep.
The fundamentals as
But
well.
was that
Working
will-
relationship still.
But of course, competition is going to heat up.
It up, yeah. Again, that will depend on each of the company. JD has its own competition, C is also its own competition and opportunity, right? So it's something that, of course, this video we can't cover everything.
Yeah, there's a lot to talk about. And of course, as a Tencent shareholder, you get JD shares as well. And it's up to you what you want to do with them. So for us, we're just going to hold on to them because it's not going to be a huge thing. Just going to keep it in a portfolio. All right, so that's a wrap up for this roundtable. Just wanted to cover this piece of news about Tencent vis-a-vis JD and C, and just talk about it. All right, so I hope this was a good summary for you guys. So once again, my name is Adam. With me again, Rusmin.
Thank you.
Thank you.
Thank you so much for joining us. And of course, if you like our roundtable, please hit the like button. Subscribe to our channel. 25,000 subscribers. We will love many more to join all of us as well. And of course, any questions about this whole thing, put them in the comment section. We'll love to have answer questions as well. So once again, thank you so much for watching, and we'll see you around again.